SBI Chairman Arundhati Bhattacharya joins us now for an exclusive chat on the prospects of the economy and the credit cycle as well. Ms. Bhattacharya, appreciate you taking the time out and speaking with us today. What are the prospects for a stable government and an economic recovery consequent to that looking like? And are you seeing signs of investment cycle now recovering anytime soon?
Actually, I know as much about this as you do. Because my opinions are also based on whatever are the pre-poll results that were there, which seem to indicate that it will be a tolerably stable government. So along with the rest of the country, I think I'm also hoping that there will be a stable government. Should a stable government come in, obviously, uncertainties will go down. And for any investment cycle, uncertainty is the biggest enemy. So to that extent, if uncertainty decreases, yes, investment cycle should start picking up.
Right, so what is your sense on other macro indicators, especially in terms of inflation and interest rates? And are you seeing any kind of dip in inflation coming through?
Actually, inflation for the past few months has been stable. It has inched up, come down a little, but overall if you see the various components also, you will see that most of the components are trending downwards, or there might be some small upticks here and there. So overall it seems to be a stabilized environment. I think the only big uncertainty in this is the vegetable prices come summer. Normally in summer months vegetable prices do go up, and this time because there is a fear of a sparse monsoon, that might get aggravated. I think whichever government comes into power, they will need to very carefully watch this situation and ensure that any supply bottlenecks don't cause inflation to spiral up again. But overall, my feeling is that inflation expectations are also well anchored. RBI has indicated a glide path which indicates that it should be around around 6% by the end of the next 2 years. So that being the case, I think we will see more of a stable inflation.
Do you believe that policy rates will remain high for the rest of FY15? And what is your own sense in terms of SBI's interest rates, both on lending as well as deposit rates?
See, rates will depend upon our ability to source deposits at lower rates. And that is very much dependent upon inflation. If inflation remains high, and if I'm not able to give a real return to my customers, I will not be able to source money. As you know, in any case, the savings rate in India has gone down. And if we are looking at a GDP increase, actually speaking, we will need to ensure that the savings rate goes up again. And how will the savings rate go up? The savings has to be in financial assets. That will happen when you are giving them a real return. And that real return cannot happen unless inflation comes down. Should inflation come down to 6%, yes, definitely we can see rates going down. But if it remains at or around 8%, I don't think there would be too much of a space for cutting of rates.
So, what is your sense on credit growth for the industry in FY15, and how about SBI? What kind of credit growth projections are you working with?
See, credit growth, I think, we are still pitching at around 15 to 16%, mainly because we are not looking at the GDP sharply going up. It is unlikely that the GDP will trend up very fast because, no matter which government comes in, even if it is a very stable and a majority government, even then, it will take some time for them to get things in place. And thereafter only, you will see things happening. You will see investment coming back, you will see approvals happening, you will see bills that were not paid getting paid. So the cycle to start moving again will have a lag time. That being the case, we are not looking at GDP growing beyond 5.3, 5.5 in the coming year. And if that is the case, then I do not believe that the credit growth will far outstrip that. So if you add inflation plus the GDP growth, and maybe a little above that, so 15 to 16% is what I would think would be the credit growth.
Right. You recently raised funds overseas via bonds, and it got a very good response as well. Tell us about the investor perception for Indian bonds, and also are you looking at tapping more funds from overseas?
At this point of time, we are not looking at raising any further funds. It will depend as to how my book grows. If there is a huge credit demand, then yes, we might go back, but at this point of time, it looks unlikely. Regarding the response we had a fantastic response. In fact, at the initial guidance that we had given, the book, even before the US markets closed, had indicative offers of up to $7 billion. And that was even, as I said, before the US opened. The fact of the matter is that the international markets, they look at India positively, but they are also very highly correlated to other global cues.
And finally, what is your take on the MCX SX right issue? Will SBI be looking at investing in it? A number of banks are waiting for SBI to really take a call, and then they'll make up their mind.
We've been looking at it, but we have some small concerns in view of the fact that they are dependent on FTIL for the technology. So we wish to see the steps that are being taken in order to make the MCX SX really independent. We'll take a call very shortly. We have not taken a call on this as yet.